We're gonna go negative.
David, I looked at the note. We're not going to say where it came from, but I looked at the note and I think I was shocked. I cannot believe.
Why did you lose
that? But I got to say, the thing is, this just confirms to me that the big institutions, the big hedge funds sold on that opening print had a very good feel, as they typically do on this.
Amazing. Well, listen, if you're retail and you felt like you were missing out on it, you clearly were not, because you can buy Facebook now at 12 cents above the offering price. I should point out, one of the largest IPOs, of course, we'd seen prior to Facebook, and certainly one high profile, though a very different profile fundamentally, with GM. GM priced at $33 a share, people may recall. First day trade up 3.6%, closed at $34.19. The same underwriters as Facebook on the GM IPO. So they did a nice job there, but okay, we're about to break. We're break syndicate here. Very much unexpected.
But Simon, you see what happened?
Not a good sign for the market, though.
You see how they had those orders in there at $40?
Yes. Oh my God!
The minute those orders were filled, you immediately then started to get what were sort of market orders that came in and did not get the follow-through.
38 unchanged. We haven't broke syndicate bid. They might want to hold that wall, so to speak.
So in other words, we now do believe that those huge number of banks.
We're right there, $38. We just printed 38 unchanged. We just printed 38 unchanged. My watch is a little off. That was 11:50 a.m. and so basically 20 minutes. 20 minutes right after the opening.
Why are those involved in the underwriting process not supporting it here? Isn't that part of their job?
Look,
isn't that their job?
38.
It's kind of a big share.
It's big.
It's kind of a big offering.
Can't step in on this one.
Firms have other capital requirements. They can't necessarily just
go negative.
But I guess what this says is that the venture capitalists who had the opportunity to increase the size that they could.
Let's not forget the overall market. I just got an email from a hedge fund manager I'm friendly with, and I won't say his name. He said, why don't we move on to a happier subject, like Europe?
Unchanged.
Oh my God. Along with Facebook here, potentially breaching the $38 level, we're taking a look at a lot of the other related social media stocks. They're all trading lower, by the way, on the day. And if you take a look actually at SOCL, which is a social media ETF, that's halting right now because Zynga's halting, but it is a down day overall.
If you look at the Nasdaq 100, 69 members of that are lower. So this is now correlating with a sizable, broad-based move.
And in line with what David had just mentioned, and Melissa, I know you guys have talked about it on Fast Money a lot recently. What if you don't get the follow-through effect on this transaction on the overall market? Now everybody's focused on the fact, what does this do? Where we were in terms of the overall market.
The psychology is, if even Facebook can't have a pop on the open, then should we have faith overall in technology?
I think the sentiment is that if a transaction they got as much publicity,
they have to defend this. If it goes negative,
price at a level where at least there is a distribution that has a respectable first day performance. What does that say for the public's?
But you just mispriced it then, didn't you? Shouldn't it have been at 36 and then...
We haven't mispriced it yet. It hasn't broken syndicate bid. It's a cent above it. Come on, Simon.
How do you think you feel if you're in that syndicate?
Listen, really? They priced it to a point where Facebook was able to raise the max amount of money, where insiders were able to realize a huge ability to sell, much more than they anticipated. And so then I'm sure the underwriters will argue, hey, listen, we priced this thing right where the market would bear. But to Gary's point, a reflection of confidence overall, a reflection of enthusiasm, animal spirits. This is not that.
And if we thought that this is going to be a positive impact in terms of the retail investors' enthusiasm for the market because of that retail allocation, imagine if this thing, and when it does, if it does close below syndicate, what that impact will be, because it will be negative just as we thought it would be a positive if there was a first day pop on it.
I cannot underestimate when I first saw that note, when we started to trade, knowing what I thought I knew about the way this book was built, I'm still in somewhat of a state of shock.
Let's bring in Kayla Tausche, who's talking to the underwriters. Kayla.
Well, Simon, I think there's definitely a big question right now about what the underwriters are doing and what their role is in stabilizing the market. Of course, we saw in the Carlyle deal they were buying the shares so that they wouldn't go below the break-even mark when they saw the shares being sold at the volume that they were at that time. You saw the price open at 42.05. You saw a big downward slide right right then, and maybe the queue of sellers was just too long, and now they're trying to stabilize it right at that price. If this goes below issue price, that is extremely, extremely negative here.
I wonder what the atmosphere is in Menlo Park at the moment, as presumably Zuckerberg and his crew sit there and watch exactly what is happening.
Or do they not care because they've made their money?
Well, maybe, maybe not. He's still sitting on a lot of stock. Or is it not relevant?
He doesn't care.
If he's not going to sell it, it's not
He
relevant.
doesn't care.
His cost
He
base
sold
is
the
so
shares
low.
that he wanted to sell at the price. Is Carl still with us out there?
Carl, are you still with us? I think we've lost Carl.
We've lost Carl. No, because you sort of get the sense, Simon, you sort of get the sense that if this thing printed 60 or 38, it wasn't going to change the mood out there in Menlo Park.
But it does change the mood from the market.
Yes.
It does change the hysteria. And for example, Kayak, which is attempting to IPO on the back of this, presumably a tougher environment, tougher reception.
Let me read something. Here's a hedge fund. Our original plan was to flip the shares. But now that we have so many shares, it may be a game changer. Not sure what we're going to do right now. Not sure what we're going to do right now at 38.30. So there are still people trying to determine, we got more shares than we thought we would get. Now what are we going to do? That's a
It's
process
so
that's
nice being right. Oh man. Especially when I had no money in the game. Ah, so good.